Alright, what's up YouTube? Tim Layton here and welcome back to my YouTube channel. If you're new here, welcome to my YouTube channel and thank you for coming. So today is going to be part 5, maybe, of my option strategy. So if you haven't seen my previous videos, I suggest you go back and check them out. It'll give you a little understanding of how we got where we're at. It has been a bit of a roller coaster ride. We've seen some really big gains and also some pretty big losses. We are currently down, but I'm feeling very good about where we're at and where we're going. As always, please subscribe, please like, and please comment anything you want to see from my channel and anything you think I can do better. With that all being said, let's get right into it. Alright guys, so before we jump into my portfolio, we're going to see that the stock market is down today, and we're going to take a very quick look at why that is. If you look right here in this title, the Dow falls 500 points to start the week as rates rise. What they're referring to is the bond yields. Bond yields are rising, the interest rates are rising, and I can't explain to you exactly why it is, just that in stock market, in investors' minds, when bond yields rise, it is a bad sign for growth stocks. So what they start to do is rotate out of growth stocks such as Apple, Microsoft, Amazon, Google, those big name, high price to earning ratio companies, and they start moving into value stocks, which is a lower price to earning ratio. Things like banks are a big one. Coca-Cola is a huge value stock. Oil companies, they're going to start rotating their money from those high growth, big name tech companies into more value stocks, safer investments. Again, I can't really explain why that is. It's just a perception investors have when bond yields rise, and that's what dictates what the market does. So with that being said, we're also going to look real quick at earnings. So earnings for the next week and into next week are pretty big. You got a lot of big banks releasing earnings this week. Today you had Goldman Sachs, Charles Schwab, and then into the rest of the week you have Bank of America, Morgan Stanley, Netflix, American Airlines, KeyBank. Those are some big names for this week. Next week's going to be huge. Got Microsoft, Verizon, Johnson & Johnson, 3M, Tesla, Intel, Boeing, AT&T, Apple, Robinhood, Visa, MasterCard. So you got some big earnings coming next week, which is either going to be really good for the market or bad. We're going to have to wait and see on that. Alright guys, now to check out my portfolio, you'll see that my options are currently sitting at $1.24. Now if you were to multiply that by 100, which is how many shares this option controls, you're sitting at $124 per contract, $123. Now, I can't remember what it was in my last video. You can go check it out. I think it was around $200 per contract was my average cost. These are now February 11th contracts, no longer the January 28th contracts. I have dropped my average down to $159 per contract. I have dumped in a lot more money than I was anticipating dropping onto these options, but I'm really thinking it's going to start to pay off. So if we kind of do some rough math, now this isn't exact because we have theta decay, we have all this and that, implied volatility, but if we do some rough math here, my average cost is $159. Now if we go back here to 12:30 on Friday, this option was at $164, with SPY being at $460. So with my average cost being $159, we can roughly guess that my break even for the SPY price that we need is probably about $460. And that's not bad, and that is why I'm so optimistic. $460 is very doable. If we see just 1 week ago, we were at $473. If we see just 2 weeks ago, it won't even show it here, but we hit $479, so close to $480. If I go down to the 52-week high is $479.98, so we were right at $480 just 2 weeks ago. So with a break even of around $460, I'm feeling very optimistic. I expect to break even, hopefully, if all goes well, in the next couple of days. And the potential here, I've invested now, I'm honestly kind of upset to say it, but I think I'm 16 grand into these options. So I expect to get my 16 grand back at about 460. And anything after that is profit. 465 is probably 16 grand in profit, 20 grand. If I can hit 472 where we were at just a week ago, where's that at? If we can hit 472, I'm probably looking at 30 grand in profit. Now, I'm not saying that's gonna happen, but that is a possibility. So, like I said, I'm feeling really hopeful. I'm trying to be greedy when others are fearful. The whole market is fearful right now, and I'm trying to be greedy. I believe it's going to go back up, and I'm trying to capitalize on that. So this is a little sad if I show you my whole portfolio right now. I am now sitting at $35,000. That is rough. A low today of 33 grand. When you look at the high, less than 1 week ago, and this is actually wrong now, I did hit $60,000. So that's a little rough, but got to stay optimistic. We're going to make it back. There is nothing going on in the market right now that is telling me that it is not coming back. There is nothing going on that suggests we are permanently at these levels. So like I said, I'm staying real optimistic, real hopeful. I got 16 grand dumped into these options, and hopefully, if all goes well, it will pay off big. So that kind of wraps it up. I'm sitting at 108 contracts with an average cost of $159, expiration date of 2/11, that is February 11th. Currently down 23%, total return $4,000. Today's return, I'm down 32% and $6,000. It's starting to come back a little bit. It's currently 112 here, so I am hoping maybe it can keep coming back by the end of the day. Maybe we can hit 140 by the end of the day, which only put me down 2 grand. That wouldn't be too bad. All right, guys, so that is my portfolio update for the day. Quick recap, I am down a lot of money, and it is nobody's fault but my own. The whole point of this series I'm doing was to show you guys the power of buying the dip and the power of being greedy when others are fearful. So, like I said, I screwed it up. It's my own fault. I'm stupid. I was up a lot of money, 20 grand to be exact, and I lost it all. But I'm hoping I can learn from my mistake, and you guys can learn from my mistake, and we can make it all back, close out of this series, and into the next one, which is going to be all about the stock market, from beginning to the most advanced that I can teach. A lot of people who watch my videos tell me they don't know what I'm talking about. It's gibberish to them, and I don't want that to be the case. I want my videos to be inviting to anybody who watches them. So it's going to go from the very basics of what the stock market is, how to invest in it, why to invest in it, and then also go into options trading, what it is, why you should do it, how you can do it, and my strategy that I use. And then hopefully after that series, anybody who watched that series will have a very good understanding of the stock market and will be able to grasp whatever I teach in my future series. So that being said, thank you guys for watching. Check back in tomorrow.